Hello Accounting 101 students. In this video, we're going to go over how to prepare a horizontal analysis as well as a vertical analysis. And we're going to be going over these concepts using question 5 in our chapter 13 end of chapter practice questions. So in this problem, we are provided with the comparative balance sheet of Sky Song Inc. And we're going to start off with the horizontal analysis on the balance sheet data. And this is actually one of those areas, it's not too hard to do. Another word for a horizontal analysis is a trend analysis. And the main things that we want to do is look at the dollar change from one period to another period for each of the financial line items. And we also want to look at the percentage change for each of these line items. So we're going to start off. This problem is set up for you with the information from the balance sheet. And you're going to start off by computing the dollar change by taking the 2017 number minus the 2016 number, and that will give you your increase or your decrease. So if it's an increase, put in a positive sign. If it's a decrease, a negative sign. And once you come up with the increase, you're going to divide that by the old year. So there's a bit of a typo from Wiley's End for this problem. Their percentage change is going to be from 2016. All right. So for the dollar change, you're going to take the current year minus the prior year. So that will be 2017 minus 2016. And then for the percent change, you're going to take the dollar change, which is going to be the current year minus the prior year. And you're going to divide that by the prior year dollar amount. And you'll want to convert that into a percentage. So for 2017, 9760 minus 8780 will give me a dollar change of 980. So now I'm going to take that same 980 and divide that by 8780. So my answer will be 11.2%, for example. And as I mentioned, this is one of those areas it's not too challenging to do. For property, plant, and equipment, we'll notice that there is an increase when we take 2,050 minus 1,840. The difference is there's an increase of 210. And this is actually in millions, so you can see that's a pretty big change. When we take the 210 divided by 1,840, we're going to get 11.4%, so 11.4% increase. So we can see that our current assets increased and our property, plant, and equipment increased from the prior year. When we look at our current assets, we're going to take 1,520 minus 1,660, and we notice that there's a decrease in other assets. So that decrease in other assets, we want to figure out the percentage decrease. So there was a 8.4% decrease from the prior year for other assets. But overall, when we look at our total assets of 13,330 minus 12,280, and remember these numbers are actually in millions, we can see that there was a substantial increase in our total assets. And the substantial increase in total assets was actually a 8.6% increase. So when we view our total assets as increasing, We'll want to know, well, why did they increase? What happened in the business that led to these great increases in our current assets? So this is where we want to look at also our liabilities and stockholders' equity. We want to know if this drive in total assets was driven by borrowing money in terms of increases in our liabilities, or was it due to an increase in equity when we have money received from our investors, or an increase in retained earnings? As we generate our net income, are we able to retain that cash within the business to purchase other assets as well? So our current liabilities, we're going to do the same thing. We take the 2017 number minus the 2016 number. So we notice there was a decrease in our current liabilities. So we're going to take that dollar difference and divide it by the prior year amount. So for our horizontal analysis, your prior year amount is your base. But we notice that our long-term liabilities also decreased. So we know that the increase in assets is not necessarily due to borrowings. And this horizontal analysis gives us some insight as to what's going on in the business. So it looks like so far they're doing pretty well because their assets increased and they didn't have to borrow more money. Okay. Then we look at our stockholders' equity and we notice that our stockholders' equity actually went up quite a bit. And companies actually do the horizontal analysis typically on like a monthly basis. They'll do it on a quarterly basis as well as an annual basis to understand the changes in the business from a financial perspective. So we notice that the majority of the increase in this section was due to stockholders' equity increasing. And of course, we want to look at our totals. So the same thing here where we just take our 2017 number minus the 2016 number, and you'll notice that our total assets equals our total liabilities plus equity because our balance sheet has to balance. So this is the horizontal analysis that we do on the balance sheet. And similarly, a company would do the same sort of a horizontal analysis on the income statement, where they go line by line and they compute the dollar change and the percentage change. Next, I'm going to scroll down so that way we can do a vertical analysis. So a vertical analysis is a little bit different. It's also referred to as a common size analysis. So you want to be familiar with the different terms. The horizontal analysis is also known as a trend analysis. The vertical analysis is also referred to as a common size analysis. And this is a balance sheet that is prepared for the year. And basically for the common size analysis, when it comes to your assets, you divide each financial statement line item by the total assets. When it comes to your liabilities and equity, you divide it by the total liabilities and equity. And what this tells you is the composition of each financial statement line item. And remember, this is the balance sheet, so it's prepared as of a particular date. It's the income statement that's prepared of the year. So I'm going to make a few notes here. Basically, for our current assets, we're going to take it 9760 and divide it by our total assets, 13330. And you're going to get a percentage. So that means that our current assets are 73.2% of our total assets. So the majority of our total assets are current assets. And then for property, plant, and equipment, 2050 divided by the same 13,330. And I'm going to notice that our property, plant, and equipment is about 15.4% of my total assets. And then for our other assets, 1520 divided by 13,330. I can see that my other assets are going to be 11.4% of my total assets. And if you had a complete financial statement with every single line item, you'll see that your 13,330 divided by 13,330 will equal to 100%. So you should be able to add up all of these to 100%. In some of your homework problems, you might not be given all of the financial statement line items. They might give you a portion of the balance sheet. So please keep that in mind, that you might not have all the accounts. For our current liabilities, we're going to take each line item and divide that by the total liabilities and stockholders' equity. So we can see that our current liabilities are 24.3% versus our long-term liabilities are going to be 9.2%. So all of these are in percentages. And our stockholders' equity is actually going to have the largest composition. So this company relies a lot more on equity financing rather than debt financing. So that's at 66.5%. And similarly, if you have all of your financial statement line items, then your total liabilities and stockholders' equity will add up to 100%. And you can also add up all of these to add up to 100%. So I'm going to pause here for a second. So I want to quickly show you that in some of your problems, for example, question 2, you might only be given part of the data and you'll need to perform the vertical analysis. And when you do this, you're going to notice that you're not going to add up to 100% because you don't have every single financial statement line item. But the concept's going to be the same. So for example, for your accounts receivable, you would take $522,000 and divide that by your total assets. And you're going to see that this is going to be 16.7%. And the same thing with inventory. And then your total assets, you're just going to divide it by yourself for demonstration purposes for this problem. And the main thing that you want to look at, or the main purpose of this analysis, is to kind of see where there's been differences from one period to another period in the composition of your total assets or your total liabilities or your equity. To kind of understand that if there is, for example, an increase in accounts receivable as a percentage of your total assets, you would want to investigate why do we have most of our total assets tied up in accounts receivable and not being able to collect as much from our customers. Or if you have more of your total assets tied up in your inventory, you might think of some strategies in order to relieve that inventory, maybe offer a discount or promotion to help drive sales and relieve some of that inventory so that way you can obtain more cash. So thank you for taking the time to watch this video. And don't forget to review the student review slides for further examples that are done with both the balance sheet and the income statement. For the income statement, the concept's going to be similar, but you divide it by total sales. Okay, so that's the difference when it comes to the income statement. You look at your total sales. Thank you.